I get to harvest my tax losses and defer paying taxes on the winners. Some people have trouble following this strategy because they think they'll never make a profit. They think that you have to sell a financial asset like a stock to do well, or poorly for that matter. That's just crazy. For a car, these people understand that you don't have to sell to take a loss. If they crashed their $30,000 car into a tree, they'd be sad. They wouldn't say, "Oh gosh, I'd better not sell it because I'd take a loss." They know that the loss occurred when they hit the tree, not when they sell. But if their $30,000 stock portfolio crashes, they'll say, "I can't sell now, I'd take a loss." They don't seem to realize that they've already suffered the loss. Some of you might be thinking, "Yeah, the tax advantage sounds good, but a crash car will never fix itself. The price of stocks can rebound." Let's think about that. The car crash turned $30,000 worth of car into maybe $1,000 worth of scrap metal and parts. And no, that's not going to be worth $30,000 anytime soon. But if your stock crash turned $30,000 worth of stock into $1,000, then it's not going back to $30,000 anytime soon either. In fact, the chance that it'll go back to $30,000 is about the same as the scrap metal and parts of the car doing that. A more realistic expectation on your $1,000 worth of stock is maybe 10% up or 10% down. Car parts and scrap metal can do that too. Here's another way to see that sticking with a loser in the hopes that you'll get your money back is looking at it wrong. Suppose your friend Christy, who held the same stock you did and also lost all but $1,000, decides to realize the loss and invest the proceeds in a different stock. Now, you both have $1,000 worth of stock. Her stock could go up too, just the way you're wishing yours will. Are you prepared to argue that your stock is better than hers? I wouldn't. Both of you probably own $1,000 worth of stock that's fairly priced. But Christy also has a big tax advantage over you because she can use the tax loss to offset gains on stocks from other stocks from taxes. On the flip side, when the price of an asset rises, it seems to cause some people the same kind of trouble. They think that they have to sell to make a profit on their stock. But somehow they think that the rules are different for other assets. Two of my friends, Craig and Anna, are really good with their hands. Their idea of a fun weekend is ripping up a carpet and putting down hardwood. They'd buy an old, run-down house, then put in a lot of what someone like me would call hard work. Bit by bit, they'd restore the house to fabulous condition so that it was worth much more than they paid for it. Everyone would marvel at how wonderful the place was. Nobody ever said, "You have to sell this place before you've made yourself better off." Nobody ever said, "You need to sell this place so you can make a profit." For some reason, some people think that it's different for a company than for a house. If the managers of a company work hard so that the stock price of their company rises, some people think that the shareholders need to sell, even if they have to pay a big tax bill, or else they haven't made a profit. They panic and sell because they think the price will fall and they'll lose the opportunity. I've never understood that. That argument assumes that the price will fall. Why do you think that it'll do that? If the price is fair, then it's just as likely that it'll continue to rise as it is to fall. Here's another way of getting past the problem of thinking you need to sell to make a profit. Suppose that you bought one share of Samsung at $40 and another share at $60. Let's say that today's price is $50. You have two shares worth a total of $100. Let's ignore taxes for a minute. If you sell the share you bought for $40, then you have one share left and it's worth $50. If instead you sold the share you bought for $60, then you'd still have one share left and it's still worth $50. No matter which share you sell, you're in exactly the same position.